The holiday shortened week saw the Nasdaq put in a doji on Tuesday, with price briefly dipping below the key trend line that we quoted in the last video, around 15,100 to 160. A doji represents uncertainty and suggests the next move direction is unclear. Price closed last week right on this trend line and remained on it at the close of trading on Tuesday as the market awaited Powell's comments on inflation and monetary policy later in the week. Considering the run the Nasdaq 100 has been on since the beginning of May, it does make sense for the rally to pause here, especially as last week alone saw Nasdaq ETF see inflows of 2.3 billion. There are additional reports of extreme bullish positioning, with Citigroup analysts stating that the S&P 500 is the most extended going back to 2010, whilst this chart shows individual investors haven't been this bullish since November 2021 on the S&P 500. With the bull-bear ratio at almost 2. Wednesday saw price break below this trend following comments from Fed Chair Powell saying that more rate hikes are likely ahead as the central bank tries to combat inflation. This shook the Nasdaq 100, with the market now reassessing. We've seen inflation fall sharply in the US. CPI currently in the US is around 4% after hitting a peak of 9.1% in June last year. So tech stocks have been rallying on expectation that we're done with rate hikes. Powell hinted at 2 further rate hikes, which could take rates up to 5.5 to 5.75%. This is why the Nasdaq 100 came off on Wednesday. Thursday you can see price retesting that key trend line as resistance. With price holding this yesterday, it is no surprise we're seeing follow through downside today. Price is currently at one of the support levels we called out in the last video, at 14,840. If price breaches this level, expect price to head towards the 20-day moving average around 14,740. Further support is around 14,540. The Bank of England on Thursday raised rates by 50 basis points as inflation remains stubbornly high in the UK. The ECB last week also hinted they're not done raising rates, so that has traders repricing risk, especially after the strong run in mega-cap tech stocks, which has seen the Nasdaq 100 outperform other major indices as shown by this chart. In terms of levels to watch into the close of next week, 14,840 support is key. If it holds, the selling is likely to be capped for the week. On the upside, key resistance will remain the trend line that price broke below on Wednesday's Powell comments, around 15,045. If we lost 14,840, then it's 14,740 followed by 14,540. Looking at the weekly chart, I mentioned last time to watch out for a false weekly break on this trend line. Despite price closing above this trend line last week, you can see price is on track to close below it this week. I do expect the pullback cooling off to continue into next week as profits get locked in and money comes off the table. Just take Nvidia as an example. Insiders have been selling at a pace, and for good reason. After its near 200% year-to-date rally, insiders are selling up and taking advantage. This is likely to be a theme across mega-cap tech stocks, which have been outperforming since the beginning of the year. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.